While the stock market has been moving higher in the past few weeks, it's got a long way to go before returning to a steady state. But my next guest is optimistic and says this is a great opportunity to buy steady names at low prices. Allan Boomer joins me now. He's Chief Investment Officer at Momentum Advisors. Good to see you again, Allan. Give me an example of what you think is an opportunity people should pounce on these days.
Sure. I mean, I think you've got to think about some of the good things that are going on, right? There's so much bad news. Like, who wants to hear more bad news? Like, the market's really overlooking so much of the good news. The biggest thing is the consumer. Our consumers in the U.S. are really in a strong position. We've got low household debts to pay. We have high cash balances. You know, look at even the J.P. Morgan results, which just showed that consumers, the balances are high, wages have grown. So consumers are really in a strong spot right now.
Okay, so what stocks do you like as a result?
Sure. So I really like big tech. You know, if you look at what's going on right now, you know, everyone had been talking about value stocks. They had been talking about energy and food. And I think tech has been overlooked. And there's so much of the bad news that's already priced in. One of my favorite names right now is Meta. Meta really just got hammered in the last 12 months. And it's a great business. Like they've got some challenges. I think their results are going to be a bit volatile in terms of their ad revenue. But I just look at the valuation. Meta's trading at something like 13 times earnings, trailing earnings. It's almost 10 times. If you look at what we expect future earnings to be, I see a tremendous amount of value in a business that has some really strong growth engines. They've got the Instagram business,
sure,
the Reels business, and, you know, again, they're investing in the metaverse as well.
It's interesting, though, you know, Google, according to the information, is going to halt hiring for a few weeks or slow it. We've heard the same from Apple. We've heard the same from Microsoft, from a number of big tech companies. What do you read into that if you're bullish on the stocks here?
Yeah, I think companies are just trying to manage their margins. They're trying to manage their expenses. They want to generate what's called operating leverage. That's when you keep your expenses the same but grow your revenue base, right? And I think it's smart. There's a lot of signs that are pointing to a recession. You know, a lot of signs. I mean, you look at the yield curve, you look at the stock market, you look at, you know, all sorts of metrics. And so I think, you know, a smart CEO or CFO is going to make some really conservative decisions around expenses in this sort of environment. But it doesn't negate all the good news that, again, as you drive around and you see people spending money, that's still a good environment for stocks.
No, and I take your point that this time around, you see that as expense management maybe and not so much a sign of worse to come. Allan, we'll leave it there. Thank you, sir.